All right, why don't we go ahead and get started. Welcome to everyone who's joined our webinar on R&D tax credits. Before we get moving, we'll go ahead and we will present a short video, just logistically how to move around your screen and get and become active in the presentation. So we'll go ahead and play that video for you.
Welcome, and thanks for joining us. Moss Adams is pleased to present another in our ongoing series of continuing professional education webcasts. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize how you both view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. For example, you can click the File folder icon to download the group attendance sheet and a PDF copy of today's slides. You can ask our presenter questions during the webcast by clicking Q&A in the bottom left-hand portion of the icon bar and typing in your question. We'll do our best to answer all questions during the presentation or follow up via email. We'll ask polling questions throughout today's presentation. Per the National Association of State Boards of Accountancy Webcast CPE standards, CPE credit will be awarded based on your participation in these polls. To respond to a poll, click the button next to your answer. If you're attending this webcast in a group, you must complete our attendance sheet to receive CPE credit. Please have all group members sign the sheet, and please remit only one sheet per group. Also note, today's session will offer you one CPE credit. To receive credit, you must meet the requirements as specified by the National Association of State Boards of Accountancy. You must attend at least 50 minutes of the session and respond to at least 75% of the polling questions. CPE credit can be awarded only to participants registered as themselves and is not available to participants who view the on-demand version. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon to open a PDF file you can save to your computer. As a reminder, the presentation you're about to see is not legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances. We're now ready to begin. Thank you.
Great. Again, welcome to today's webcast, A Generous State Claiming Arizona's R&D Tax Credit. My name is Mark Weber. I'm a partner with Moss Adams, and I'm the partner in charge of the firm's Phoenix office. I'm excited about today's topic, and it highlights a lot of potential opportunities for you to reduce your tax liability and increase your cash flow. You have a couple of very knowledgeable presenters today. Tom Sanger, who leads our R&D tax credit tax services practice, and Peter Henderson, who specializes in the federal, California, and Arizona R&D incentives. So the agenda for today, we'll do an overview of the federal R&D credit, and then we will also then go ahead and get into the Arizona R&D credit overview, and then specifically talk about the what's unique in Arizona with regard to the refundable R&D credit, and then we'll touch base and go through the process for successfully claiming your credit, and then we'll do a recap and have some time available at the end for some Q&A. And with that, I'll go ahead and hand it off to Tom.
Thanks, Mark. Actually, Peter's gonna head up this next section. Yeah. All right. Thanks, Mark. So we're going to start off by giving an overview of the federal R&D credit, and the reason is that the Arizona credits, the rules of the Arizona credit, really follows those of the federal credit. There are some exceptions, and we'll go over those in more detail later. But for now, just know that the Arizona credit essentially piggybacks off of the federal credit rules. So the federal R&D credit is by far the single largest federal tax incentive tax credit available. And each year, total federal credit claims amount to, this says $6 billion, but that's a few years old. It's actually closer to $10 billion each year. So that essentially means that the federal government foregoes $10 billion in revenue as a result of this credit. So it is a very significant incentive. And the sheer amount of the credit brings up the question as to what's the purpose of it? Why is the government willing to forgo that much revenue every year? And this statement here helps explain the purpose of the credit, and it reads, the R&D credit helps keep the U.S. economy at the cutting edge of 21st century technologies while expanding high-tech jobs, encouraging innovation, and increasing future productivity and growth. So it's really a major economic booster and also a jobs booster. And next up, Tom is going to discuss and quantify what the benefit can essentially be for your company.
Yeah, thanks, Peter. Just before we get too far in, I'm Tom Sanger. I do head up the Research and Development Tax Credit Group for the firm. And Peter is a senior manager. And, we've been working on both the federal credits as well as the Arizona and many other state credits for over a decade. I think I started about 13 years ago. And the R&D credit is definitely one of, the more lucrative business credits out there that our clients are taking advantage of. One of the first things that our clients, tend to ask, is, why is this important, or why should I be, paying attention to this presentation? And the real key is there's real dollars available. And on the federal side, and the reason why there's not exact numbers is that there's some calculations that are involved, and there's some different thresholds that need to be met. But overall, on the federal side, we're able to get about 5 to 10% of our qualified research expenditures, which we're going to talk a little bit more about in the next few slides. But basically 5 to 10% for federal, and then on the state side, it tends to be close to the federal as well. And as we keep discussing, you'll probably hear on a number of cases, Arizona has a very lucrative R&D credit. And so between the two of them, you're talking about getting 10 to 20% of the qualified expenses that can be R&D credit, which is a dollar for dollar reduction of taxes. And so not only do you get to expense these expenses, but you also get to reduce your taxes dollar for dollar for the credits that are generated. So overall, very, very lucrative for our businesses. The next slide I just threw out just so you can kind of know what we're talking about. And these are just hypothetical companies. We've done pretty much all these industries and many, many more. As we get going, and you'll hear more from Peter in a minute, pretty much any industry can qualify. You need to meet the definition of R&D. And so as you look through this, you can see that these are the total taxes saved, which is the far right, kind of shows you what types of taxes, we've seen being saved on a yearly basis. And so in many cases, we're going back and we're amending the prior 3 years, or in the states 4 years, or even longer in some cases. But it's not unusual for us to be claiming, hundreds of thousands of dollars to millions of dollars of a net benefit for our clients. And in many, many cases, the R&D tax credit study is the most lucrative project that a company has worked on. As we go through, I'll just throw a few out. Like the aerospace subcontractor, $9 million of revenue, $125,000 of a net benefit each year. Mechanical contractor, $100 million, $700,000. When you start getting down to some other ones, you can see like a software designer, $4 million in revenue for $175,000. One thing that's really key, and we'll go into more detail, but it's not based on revenue, it's based on your qualified research expenditures. And we're going to go into the types of activities and everything else next. So Peter, why don't you take us up through that?
Yeah. All right. So transitioning into the type of activities that can qualify for the credit. Before we go into the actual rules, it's important to note that the definition of R&D per the tax code is different than book or GAAP R&D, which a lot of you might be more familiar with.
I think it's also different from what people just think of R&D as well. And so a lot of times when you ask an engineer, are you doing R&D, their response is going to be, nope, I'm just doing normal engineering. And so it's really key to understand that just because you don't think you're doing R&D, if you're meeting this 4-part test that Peter's going through, then you can still qualify for it.
Right. Yeah, and the tax credit definition is a lot more expansive and encompassing than the traditional book or gap definition and what most people's perception is of R&D. So a lot more qualifies than people often assume. And so the tax code defines R&D as activities or expenditures that meet the 4-part test. And as the title suggests, there are 4 requirements, and you've got to meet all 4 of those requirements, opposed to just one of them. And just to read through them real quick, first one is that the activities must be technological in nature. They must be done for a qualified purpose. They must involve technical uncertainty and constitute a process of experimentation.
And these four areas, and Peter's going to go to each one a little bit more, just to be clear. It sounds kind of simple, but it's probably defined over thousands of pages of court cases, tax law, regulations, and everything else. But when it kind of boils down to it, we need to meet these 4 areas in order for us to capture for both the federal credit as well as the state credit.
Yep. So going into these in more detail, first one, technological in nature. This is generally the easiest one to me, and it basically just states that the activities need to rely on the hard sciences, and so that can be things like physics, physical sciences, biology, engineering, computer science, etc. Things like marketing, market research, logistics, vendor, supplier relationships, social sciences, those would not be considered hard sciences and not eligible for the credit.
And the tax law is pretty clear that you need to be utilizing the technical sciences. They don't need to be degreed engineers or scientists. A lot of cases our companies do have degreed engineers or scientists, but it's clear that you need to be utilizing these sciences versus having the degrees on your wall.
Yep. So the second requirement is what's called the qualified purpose requirement. And this just states that the activities need to be intended to create a new or improved product or process. And this is an important distinction here, because when most people think of R&D, they think of product design or product development. But as the definition here suggests, that in addition to product design, we can also take process design or manufacturing process design / improvements. So the other key words here are that it includes both new or improved process or product design. So if the development in question is an entirely new product or process, you met the requirement there. But also improvements to existing products or processes can also qualify, as long as those improvements are intended to increase things like performance, reliability, quality, etc. So the third requirement is what's called technical uncertainty. And this just states that the activities must be intended to overcome some technical uncertainty concerning either the capability, the method, or the appropriate design of the product or process. And this basically just means that you can't know how you're going to get to your end result from a technical perspective from the outset of the project or the onset of the project.
But in a lot of cases, you can accomplish something, but if you don't know the appropriate design, that's the process that we can capture. And so that's where a lot of our clients get hung up is they think, well, I know I can do it, and the engineers say, I know we can do it. It's not violating any sciences, and we do it on a regular basis. But if your customer comes to you and says, can you make this? Usually the salesperson says yes. And engineers know they can do it, but it's that how they're going to figure it out and how they're going to do it is what we can be capturing for the R&D credit.
Right. Yeah, and that is the most common scenario. We find that companies generally aren't going to undertake a project if they have significant doubts about whether they can do it. The question is generally how they're going to do it, like Tom said. So the fourth and final requirement is the that there must be some type of process of experimentation in that development process in order to eliminate that technical uncertainty. So this requires that you're systematically evaluating different design alternatives throughout that development process. And that concludes the four-part test. So just remember that if an activity or project meets those four requirements, then the associated expenditures will qualify for the credit. And actually, there is one additional thing I should mention, which, as you'd expect, the activities do have to be done within the U.S. for the federal credit and within Arizona for the Arizona credit.
And pretty much for within all the other state credits, it's within their state as well.
State boundaries, yeah. So next up, Tom, I think you're going to discuss the types of expenditures that can qualify.
Yep. So once we know the types of activities that qualify, the big area is now we need to capture the qualified expenditures. In some cases, some businesses keep track of that pretty closely. They have good, what they call nexus, the expenses that are tied to various activities. Other cases, we don't have good time tracking. We don't have good nexus, and we have to recreate that. But for the R&D credit, there's three categories of expenses that we can capture. They're wages, supplies, and contract research. And as you go through, for wages, it's for people who are directly doing research and development, people who are directly supporting it, and people who are directly supervising it. So in a lot of cases, the web of a lot of our companies, it spreads throughout an organization because you have people who are directly, supporting the process by maybe finding components. You have people who are directly supervising it, and then obviously you have people who are doing it. The IRS basically says that, for the wages, if somebody's doing 80% or more R&D, then we would just capture them at 100%. They call that the 80% rule. For those who are doing less than 80%, you figure out their percentage of time involved with directly supervising, doing, or supporting the process, and we just take that percentage and we multiply it by basically box 1 W-2 wages. It's just a federal rule. It's an IRS rule that's how you calculate it. So it's not off of the GL. It's not off of just their gross wages. It's off box 1 W-2 wages. For supplies, supplies are used in the process. So it does not include capital assets such as computers or equipment that are being purchased to develop a new product or process. I should say it's not used if they're turnkey type systems. If you're developing or designing a new piece of machinery, then potentially those costs would be captured. On the contract research side, those are basically for expenditures that are paid for somebody outside of your organization that is doing basically meeting the definition of R&D, and if they were an employee, they would capture. And if we're going to capture them, we capture them at 65%. So big area. Those are the three major areas that we capture for qualified research expenditures. There is no overhead, no capital equipment, as I mentioned. Materials can be captured if they're used in developing a prototype, and even if the prototype is being sold to a customer. So overall, I think those are the three major areas. Industries with R&D credit potential, I think I mentioned before, it's pretty much any industry that you're taxable because you'd want to be able to utilize these credits in a taxable setting, and that you meet the four-part test as Peter went through. So we've seen aerospace, apparel, automotive, food and beverage, forest products, life science, software, all those areas, we've seen. We've been capturing it. Some big areas that we've, probably indicators that you are doing R&D is, do you have engineers on staff? Do you have, any kind of scientists? Do you have a product development department? Do you have any kind of patents? Things like that. Those are great indicators that you are probably doing R&D that would be eligible.
Yeah, and there's actually a safe harbor to an extent for patents. So that's not that a company needs to have patents by any means to claim the credit, but if there are any patent filings, that's definitely a dead giveaway that there's some R&D credit there.
Yeah, excellent point. And as Peter mentioned, you don't have to have it. Probably 95% of our clients don't have patents for the development they've done, and they still qualify for the credit. So,
And then,
so now,
So, Tom,
ahead, Mark.
in my area of practice, I work with numerous biotech and life sciences companies, and I see that as a growing industry group here in Arizona. Are you seeing a lot of companies in that industry claiming those credits, and is there anything unique about those companies in that industry?
Yeah, that's a great comment. I mean, there's two in my mind. There's a couple, different types of, life science type clients. There's one that's profitable, and there's one that isn't quite developed their product, and so they're not profitable. And the Arizona credit, as we're going to go into a little bit deeper now, is unique in that it's refundable. The federal credit, you can offset taxes that you owe. So in a lot of cases, we have a lot of life science companies that have large R&D tax credit carry forwards, and they'll just keep carrying forward for the federal purposes for 20 years, for state purposes 15 years. So the unique thing, obviously, and we're going to go into greater detail, is the ability to get a refund check from the state. And a lot of the tech and life science companies are loving that aspect of it. It helps their cash flow, and they're seeing immediate benefit versus I've dealt with tech and life science clients that they have credits from 15 or 18 years ago, and they're hopeful that they're going to utilize them before they expire for federal at 20 years.
And also on the life sciences companies, one thing we commonly do is the first time we're engaged to do an R&D study for these companies, we can go back very far if they were in losses. So if they're thinking that they're going to become profitable in the near future, it's a good time to look into doing an R&D study, because we can go back essentially to the company's inception and calculate R&D credits and put those on the carry forward schedule.
Right.
Great. Thanks, guys. So throughout the presentation, we'll have a few polling questions. So we're now at our first polling question, and it's a simple true or false question. The R&D tax credit is limited to high-tech companies developing cutting-edge technology. True or false? So we'll give you a few seconds, 30 seconds or so, to come up with your answers. Hit the submit button, and we'll see how the poll comes out. I think we're talking specifically about the federal credit so far. All right, let's see how we came out on the answers. 73% false, 26% true. You guys want to comment on those answers?
Yeah, and the correct answer is false. It's not just limited to high-tech companies. Going back to some of those industries that were specifically listed on those slides, it's everything from aerospace to life sciences to wineries. Really, any company that is developing some type of product or some type of process is eligible to qualify as long as they meet those core requirements.
Yeah, this is the number one. The reason why we put it the number one slide is this is the number one battle that we face. Is basically Congress created the R&D rules to make the United States competitive internationally, and one of it is the development of new products and processes, so that way it'll be internationally viable companies. But two, it's just to reward U.S. businesses, and so the hurdles are not what you think of as NASA or putting a spacecraft on Mars. They're in some cases making a plastic molding that holds 2 gallons of milk together, and that little thing that when you go to Costco and you grab some milk, that qualified for an R&D tax credit. And so overall, it's a lot of the things you see in your day-to-day life, and a lot of the things that your company is doing. If you're designing or developing a new product or process, you're doing R&D. The question is, are you doing enough to qualify for a significant federal or state credit?
Great. Thanks, guys. So we'll go ahead now and move into specifically the Arizona R&D credit.
Great. So as we go through, I think it's been alluded to and probably in the title of the presentation, Arizona has a very generous R&D tax credit. It's the highest state R&D credit in the nation. It's higher than the federal side. These are both at, if you're doing $2.5 million of qualified research expenditures or less, it's at 24%. It's the highest. It does track, as Peter I think mentioned earlier, it kind of tracks how you calculate the federal credit. Some differences relate to it. It's higher. It's a 24% credit versus a 20% for federal. One of the thresholds you need to deal with relates to gross receipts, and that we're getting a little too deep, but basically it makes it simpler because it's only the gross receipts in Arizona. And then a big area is just the credit is not taxable. On the federal side, there's two different ways of calculating the credit. In the gross credit, you basically then add back that credit as taxable income, and it just reduces the credit. So very lucrative, 24%, but also really easy to get with only Arizona gross receipts as well as not taxable. So and it is available to corporations, small businesses, individuals, and all types of pass-through entities. So the next slide.
So the reason we mentioned that it is available to corporations, individuals, and all types of pass-through entities is that there were previously some restrictions on the type of entity that could claim the Arizona credit, but those have been lifted, so it's open to all entity types.
Yeah, thanks, Peter, for elaborating on that. The next slide, just highlights, why we're saying it's a generous state. As you see, Arizona is at the 24%. Federal, I think Hawaii and Arkansas are at 20%, and the rest are lower than that. And it's typically what we see is most states are offering between 5 and 10% credit. And so with the federal state, this is just the general credit. We're not even talking about the refundable at this point, but just the general credit is much more lucrative than many states out there. And so Peter's going to go. I mean, once you kind of figure out how big are these credits and how beneficial they are, the usability becomes a big issue on both the federal as well as the state. So Peter's going to go into the usability of these credits.
Yeah. So thanks, Tom. And usability is a very important issue for the Arizona credit, and there's a few reasons for that. And by usability, what we're referring to is, if a company generates a credit, usability just refers to whether they can actually use that credit to lower their tax liability in the current tax year. Now, Arizona has a relatively low personal and corporate income tax rate of 4.54 and 6.9%, respectively. Compared to other states like California that are much higher. But at the same time, Arizona still provides a very generous R&D credit with that 24% credit rate. So this commonly leads to situations where companies generate Arizona R&D credits that far exceed their Arizona tax liabilities. And as a result of this, what we commonly find is that companies will first completely eliminate their state taxes and then still have an additional Arizona credit on top of that. And so the question is, what does the company do with that excess Arizona credit? Now, Arizona and most other states with R&D credits allow you to carry that credit forward to future tax years to offset future taxes. And Arizona specifically will allow you to carry that credit forward for up to 15 years before it expires if it goes unused. And oftentimes when companies earn heavy losses or have unused NOLs, they may not expect to be able to use these credits for many years. And of course, most companies want to use the benefit as soon as possible, ideally now. And that's where the refundable aspect of the credit comes in. So this refundable aspect essentially allows companies to receive the benefit of unused credits in the form of an immediate cash payment at a reduced amount in lieu of carrying the full amount forward. Looks like we've got another polling question.
Yeah, so we've got our second polling question now, and which tax jurisdiction offers the highest R&D tax credit? Is it Arizona, California, federal, or Texas? I think we had a slide up there that had a graph that identified some of this. Give everybody about 10 more seconds and go ahead and hit the submit button when you're done, and we'll check the results. Okay, let's see how we did. Wow. 84% selected Arizona, 5 California, 10 for federal, and I guess nobody likes Texas. So,
the correct answer is in fact Arizona with that 24% credit rate. California has a 15% credit rate. Federal credit rate is 20%, and Texas is around 5%.
Right. One other area, just as we're going through it, at the end of our presentation, we're going to be answering any questions you have. So please do submit them. You can submit them now and throughout the presentation. I believe it's at the bottom of your screen under the Q&A tab. And it is really helpful to be able to have some questions at the end that are specific to your organization as we go forward.
Great. All right, so now Peter's going to begin an overview of the Arizona refundable credit.
All right, so this refundable option, it is only available to companies with 150 or fewer full-time equivalent employees. And a full-time equivalent employee is just, essentially 2 half-time employees working 20 hours a week would equal 1 full-time equivalent employee. And just to be clear, companies with over 150 full-time employees can still claim the regular non-refundable Arizona credit. There's no restriction on that. They can still claim that and use it to offset their current taxes. They just can't elect to receive any excess back in the form of a cash payment. So again, no size restriction on the regular non-refundable credit. The refundable incentive it's somewhat unconventional in that it's administered by the Arizona Commerce Authority, or the ACAs we'll call it, opposed to the Arizona Department of Revenue. And we'll talk exactly about how the mechanics of that work a few slides later. But important to note that there is one big catch to this refundable incentive, and that is that total refundable credit claims are capped at $5 million per year. And that $5 million pool is allocated on a first-come, first-served basis until it's gone. So this means that Arizona is really only showing out $5 million in total refundable claims across all companies each year.
And it is $5 million for the refundable. It's unlimited for the general credit.
Right. And so there is no per company limit, but it's all companies combined, $5 million. And mentioned there isn't any per company limit, which theoretically means that one company could come in and file a $5 million refundable credit claim right when they open up the application process and deplete the entire pool. It's highly unlikely that would ever happen, just because a company with that few of employees, it'd be pretty unlikely that they were to generate a credit that size, and for some other reasons. But it's just important to note that there is a lot of uncertainty regarding that $5 million pool and getting a piece of that. Each year it's been depleted quicker and quicker. So last year the $5 million pool was actually depleted by the end of the first day that they began accepting applications.
So January 1st.
January 2nd.
Excuse me, January 2nd, the whole amount was gone. So those who said, I'll get to it after I get back from my holiday break, probably did not get any refundable portion of their credit.
Right. And 2 years ago, it was gone by sometime in mid-February, and I believe 3 years ago it was maybe March or April.
So we're expecting our discussions with the ACA. We're expecting it to be gone the first day as well. So we are working with our clients to make sure that everything is all lined up and that we're basically pushing submit the first hour or first minute that they are accepting applications.
Yep. So, yeah, and we're planning on being in the office at midnight and filing until they're done. So, also one of our contacts at the ACA told us that each year about 60 to 80 companies get a piece of that $5 million reserve. So that averages out to about $70,000 to $75,000 on average per company. But there is likely a lot of variance in the actual amount per company claimed. But not a bad amount for taxes that they never owed or never paid. So the next slide just shows us a visual representation of how that excess how that excess credit can be treated, and that's again the amount of the current year credit that remains after a company has depleted their Arizona tax. And so the first question, or really the only question, is: does the company have fewer than 150 full-time equivalent employees? And if the answer is no.
Peter, one clarification: public, non-public, does it matter if they're publicly traded or non-publicly traded?
It does not matter. Okay. Yeah.
Wonderful. For some reason, I thought there was a question on that too, but I'm probably off on that.
Okay. Yeah. Right. So if you don't have fewer than 150 full-time equivalent employees, that is, if you have more, then the company must carry that excess R&D credit forward for up to 15 years until it is utilized. If the company does have fewer than 150 full-time equivalent employees, they can do one of two things. They can either elect to receive that excess back at a reduced amount in the form of a refundable payment, or they can carry the entire amount forward, 100% of the amount forward, for up to 15 years. All right, so we've got an example of well, not an actual company, but a made-up company here. And so this just goes to show how the company would actually receive the benefit of both the federal credit and the Arizona credit. And in this example, we've got a Scottsdale-based software company with 55 full-time equivalent employees, and they have a federal tax before credits of $150,000 and an Arizona tax before credits of $40,000. And it's common that the federal tax would be higher, given the higher federal tax rate. Now, this company generated an Arizona R&D credit, a federal R&D credit of $70,000 and an Arizona R&D credit of $80,000. And here again, the Arizona credit is higher due to that higher Arizona credit rate. All right, so federal tax savings. So how would this company actually see the benefit here? So the original federal tax of $150,000 would be reduced to $80,000 by applying that $70,000 of federal credit. And this is just an overly simplified example. We're not accounting for anything like AMT or potential limitations that could prevent the company from actually utilizing that full amount on the federal side. On the Arizona side, the first $40,000 of their Arizona tax would be eliminated, and then they'd still have $40,000 left over. So the remaining Arizona credit can be refunded, opposed to carrying it forward. And if they were to elect that option, they basically get a check for $30,000, which is just calculated as 75% of that $40,000. Or they could carry the full $40,000 forward.
So it's really important as companies are figuring out their, whether to do the refundable or not, is usability. Again, they think that in the next year they're going to be able to use it all, then maybe it makes sense not to do the refundable and just do the general credit because you don't want to take the 25% haircut. But because the credit's so lucrative, in some cases you're just constantly generating more credits than you're actually able to use, so it's better just to take advantage of that.
Yeah, and that's very common. So this next slide just shows a breakdown of that benefit again. $140,000 in total benefit, $70,000 in federal tax savings, $40,000 in Arizona tax savings, and then $30,000 in the form of a cash payment for taxes that they never owed or never paid. All right, got a polling question.
Okay. Back to another polling question. Again, true or false? Only companies with fewer than 150 full-time equivalent employees can take advantage of the R&D tax credit. Is that true or is that false? Go ahead and you've clicked your answer, hit the submit button. And as Tom mentioned earlier, if you have any questions with regard to anything along the way with the presentation, feel free to submit those questions at any time. All right, in about 10 more seconds, we'll go ahead and close down the polling. All right, let's see where we ended up. It looks like most everybody selected false. Peter, Tom, any response?
Yep, I think they nailed it. You get the regular credit if you have in addition to 150 full-time equivalent. So either way, both this presentation is you get the federal credit as well as the state credit. If you're not able to utilize the credits and you're under 150 full-time equivalents, then you can get a refund. If you're above that, then you still get the credit. You just get you get the regular credit.
All right. Go ahead and move on to the process.
Okay, so I'm going to explain the steps and timing associated with this refundable credit filing process. It is a bit complicated, and as I mentioned a few times, there is that $5 million cap in total refundable credit claims. So knowing the steps and timing is really critical. And so the process is all done electronically online, and the first step is to sign up for an account with the ACA. So this is something that the actual taxpayer or client has to do, and they actually have to do it every year, even if they've done it the previous year. And as part of this initial registration process, the taxpayer would list their external CPA as their designated representative, which would then give that CPA access to this online account to be able to file the forms. And let's see, so the next step is to complete an R&D study. And this generally needs to be done by the end of December if you're going after the refundable credit. So the third step is to file what's called the application for a certificate of qualification. And this is where the clock really starts ticking as they open up the application process for this at midnight on January 2nd, and it's first come, first serve from there.
And throughout this whole process, we're talking with and working with ACA to make sure that we're able to get we're not going to have any hiccups through the process.
Yep. Yeah. So every year there are some changes, and we make sure to be aware of those changes beforehand so there's no surprises. And so the purpose of this application process is it's to first show that your company is eligible for the refundable credit. And second, it's to get pre-approval for the maximum amount that you'll be eligible to be refunded. So in order to calculate this maximum amount, you need two things, which first of all is your R&D credit calculation. And the second is your estimated tax liability. for the year. And the reason you need those two things is that the difference between your estimated tax liability and your R&D credit is going to be the amount that you're eligible to be refunded, or 75% of that amount would be the amount you're eligible to be refunded. And it's important to note that you do not need to file your tax return at this point. As of January 2nd, this is just the pre-approval process. You still file your tax return at the same time that you normally would, whether that's March 15th, April 15th, or September 15th. So no need to file an early return. So if you're successfully approved, you'll get what's called a certificate of qualification from the ACA. And this will state the maximum amount that you're allowed to be refunded. And then when it comes time to file your tax return, you will include that amount with it, that certificate with it, and ultimately get a refund when your tax refund comes. So Tom is going to talk about the timing of the refundable credit process.
Wonderful, yeah. So as mentioned, it's probably first day is going to be the timing. As Peter discussed, it's going to be one where getting your study done in December, getting it all done, getting the areas, all the documentation, all the support together, and then just really getting the stuff all through. Having the discussions with the ACA, knowing what things give them heartburn or what things are missing in the documentation is really key. So just be really on top of this stuff, and if you're going to be claiming it, I believe you have to claim it the first day it's available. So I think that's the key there.
Okay, we have another polling question. When is the best time to consider whether your company may be eligible to apply for the refundable Arizona R&D tax credit? Just before April 15th? ASAP? Just before May 15th? Or sometime in March? We talked a little bit about what needs to get done in order to appropriately move the process forward. Give everyone about 10 more seconds, and we'll go ahead and close the polling. Okay, we'll close it out and see how we did. Looks like most people decided ASAP was when we needed to do this.
Yeah, the real key, if you're going to get the refundable, we have to start the process of figuring it out right now. As Peter mentioned, it has to be filed, I believe, on the first day they're accepting applications, that the whole credit, the refundable $5 million will be gone after the first day. Yeah. Tax return can be done later on. It could be whenever you typically do it, whether it's through extensions or not, but you have to get approval.
Yeah. But if you're not going through the refundable process, or if you're not interested in that, if you have a large tax liability you're anticipating, then it is okay to wait a little longer.
Great. All right. Tom's going to have a wrap-up section with how we successfully claim the credit.
Great. Well, we've covered hopefully enough information to let you know kind of what things to look out for, what things need to occur. First off, you need to know, do you have qualified activities? If so, then we need to know what are those expenditures that are tied to those. And so the nexus between that is important. As we're doing these studies, it's really figuring out, does all the stuff line up, and does it all qualify? And some things are going to not qualify, some things are going to be qualify. We're looking at a lot of contracts, if you have contracts with the customers, just really understanding everything. And as mentioned by Peter, it's this isn't what you would normally define as R&D. This is whether you meet the 4-part test. It's not what you got booked at on your book statements or your financial statements on whether it's qualified or not. This is whether you meet the 4-part test and then doing a study and figuring it out. auditors are really likely to challenge things that aren't documented properly and that aren't supported. So the real key to the study is to really support this, both on the federal side as well as the state side, as well as the refundable state. So a recap would be it's the largest business tax credit available for federal purposes. Arizona is very, very lucrative, both on the refundable as well as on the non-refundable. And you need to really attack this now if you plan on getting the refundable credit. If you wait, you will most likely not qualify for the refundable. You will get the credit for the general credit. And give us a call with any questions or work with your tax provider. Our group, we're structured to do R&D studies. That's pretty much all we do, and we'd love to help you if need be. Peter's going to talk a little bit, just briefly, on some other incentives.
Yeah, we figured it was worth mentioning just a few other Arizona incentives that are out there. We're not going to go into any detail on these, but figured it was worth mentioning in case any of them jump out to you as being relevant to your company. First one is what's called the Qualified Facilities Tax Credit. So that's essentially a credit for developing a new, either a new headquarters, a new manufacturing facility, or a new R&D facility within Arizona. And this is actually also a refundable credit. And the cap on it, there is a cap, but it's actually much higher than the $5 million cap associated with the R&D credit. So it can be a really good deal if your company has invested in a new facility within Arizona. Quality Jobs Tax Credit. This is essentially just for hiring certain types of employees within Arizona. Job Training Grant is an incentive for establishing certain training programs for employees. And there's also what's called the Sales and Use Tax Exemption for manufacturing. And so this is if you're meeting the requirements of the incentive and you're manufacturing or performing R&D, the capital equipment involved can be partially exempt from sales tax. And these incentives here are really just those that are administered through the Arizona Commerce Authority. There are other more conventional incentives that are just administered through the Arizona Department of Revenue, such as the domestic production activities deduction and various other things. So, if any of those jump out to you, reach out to us and we can get you in touch with somebody who specializes in those incentives.
Well, great. Thank you to Tom and Peter. A lot of good information, good insight. Just a reminder to the attendees, a copy of the presentation, the slides will be sent to you following the presentation today. So we want to keep everybody on time, on track. We've got about 5 minutes for any Q&A. And again, if you look down on the left of your screen, you'll see the option and you can click on the Q&A, and that'll activate a text box, and you can type and submit your question there. And we'll do our best to answer all questions. But like I said, we've got about less than 5 minutes now. We'll follow up any additional questions. We can follow up by email. So there are a couple questions in the queue. Let's see. Peter, first question, how long does it typically take to complete a study?
Yeah, that's a question that we get quite a bit, and the answer is that it depends. Smaller studies we can knock out fairly quickly, and by smaller it just depends on how many people are involved, how many employees, how many projects need to be documented. But some of the lower dollar credits, we can knock out within a week if needed, whereas some of the larger ones can take upwards of a few months from start to finish, depending on the availability of employees that we would need to speak with and availability of the records and data. So, but we can, we also, if need be, we accelerate those. If a company wants to accelerate it, we can do that.
Yeah, we always make the deadline of the first day of that filing's available for the refundable, and those would be prioritized. If we think we're going to get that, we'll need to attack it.
Yep.
And Peter, you made a comment in your answer there. It kind of segued into the next question. How much time and involvement would be required by our staff in a typical study?
And again, that really depends on the company and the structure. If a lot of companies seem to have a real go-to technical person that we can get a lot of the information from, or the bulk of it. The taxing authorities do like us to speak with more people in more departments. So again, it just depends on the size and really how the knowledge, the technical knowledge and the information is, who possesses that within the company, how widespread it is.
I think I mentioned it earlier. I think, the number one, comment after the fact is, wow, this was easier than I thought it was going to be. It didn't distract my folks as much as I thought it would. So we're very cognizant of making sure that we're allowing those engineers, scientists, and other important, production development folks to keep doing their work, and we spread the work out that we need. But there is some time commitment on their part, but it tends to be very doable.
Yeah, and the first year generally requires more time on their part. Then subsequent years, as we learn more about the company, tend to require less of their time.
Okay, looks like we have time for maybe one more question, one or two. Tom, interesting question. Can I calculate the credit myself? Maybe you can go into why or why not.
I think you can if you do everything. It is fairly complicated. What qualifies, what doesn't. What we see a lot of times is people don't fully understand that the different people or the various expenses do qualify, and so we pretty much all we do is the R&D tax credit, both for the federal and the state. So we tend to know what's acceptable both on the federal and the state side. We also know the process of how to get the refundables. If you have a hiccup, you're probably not going to get the refundable, and that's, I think, the real value that we add is, one, I think we do a good job at knowing how to get the most credit that's allowed by law, but also how to do all the paperwork and get it done. So definitely something that we can help make it life easier on the company side.
Okay. Well, it looks like we're down to our last minute, so I just want to thank everybody.